Hey, everybody, we're here. Thanks for joining us today. In today's webinar, we'll be talking about banking as a service, how financial institutions can navigate this next banking revolution. Before we get started, a few housekeeping notes to ensure you'll have all the best experience you can. We'll be answering a few questions from the audience at the end, so please use the Q&A chat window to submit any questions you have while watching the webinar. If we don't get to yours, any unanswered questions during the broadcast will be answered via email, so you'll get something from us with an answer. And if you're watching this on demand, you can still ask questions. We'll answer them directly via email as well. You can check out the resource list widget for additional materials related to the webinar. If you're having any technical difficulties, try refreshing your browser or clicking on the help widget. And for general questions, just email us at hello@levvel.io. So now that we've got that out of the way, on today's webinar, we're going to focus on a practical approach to banking as a service from a digital product perspective, how banks technology comes into play, and how we look at the business case and roadmaps where you're building out these types of features. So, hey, I'm Toby Rotman. I'm a senior manager in the financial services and payments area at Levvel. We're a business and technology consulting firm with a long history in helping financial institution clients think through and implement strategies and modern technologies. I'm joined today by Scott Harkey and Hish Salama. Scott, you want to introduce yourself?
Yeah, hey, thanks, Toby. Hey, everybody. So this is Scott Harkey. I am the Chief Strategy Officer and Head of Financial Service and Payments here at Levvel. Excited to be here today. And Hish, if you could introduce yourself, that'd be great.
Hey, everyone. This is Hish Salama. I'm the Chief Digital Officer at Bank of the West, and I just really appreciate the invitation from Levvel. Toby, Scott, thank you guys for having me.
Great. Thanks, guys. I really appreciate it. I'm so happy you were able to join me today, and thanks for taking the time. So now let's dive in. So in the first part, we want to focus on how to think about strategy and innovation in a new world of banking as a service. The concept has been out there for a long time. Names have changed, but whether we call it digital transformation, open banking, modularization, or banking as a service, the concepts are generally aligned. So let's dig into how we'd approach an overall marketplace through a very product-focused lens. Specifically, as banks look at where they are in the process of modularizing their digital stack and banking as a service vendors, there are so many options. We've all seen an infographic like this. Everyone's got one. I didn't even create one. They're so ubiquitous. So I just kind of grabbed one. So Scott, there are hundreds of pure play companies that exist across all parts of the bank value chain. How should banks be thinking about their strategies and innovation plans in this modular environment and such a congested space? How can they navigate the options?
Yeah, I really think about it as almost a best of breed approach, right? The way that a lot of banks approach technology, and especially technology vendors, even a couple of years ago, was to look to a big provider like an FIS or a Fiserv and just buy everything basically. We still see some of that for sure, especially in smaller institutions where there's not as much internal IT kind of capability or people to help navigate those decisions. But more and more what we see is really trying to identify who is the vendor or partner that best solves the customer need for you, starting customer first, right? We didn't say that to start with, but that's always the mindset of how we think about it. We love things like jobs to be done theory and other things that really focus on the customer, the pain point, the best outcome you can get for the customer. And so when looking at partnerships and looking at this kind of the playing field, if you will, it's identifying who best meets that need, who best serves that, ultimately the solution that's needed or helps the customer. And that can really be different from bank to bank or institution to institution. What may work well for one doesn't work for another, depending on the different product mix that maybe a bank has, or maybe how they view the market and what their competitive advantage is. So it's really pretty specific to the bank and what the individual bank is trying to achieve.
Yeah, and I would just jump in and say, completely agree, Scott. But, looking at this slide, it's extremely confusing if you're not, one, very clear on what your strategy is, and then two, what each of these providers brings to the table. And I think that's where a lot of this gets lost in translation, specifically with headlines that come out and, talk about customer growth with one of the fintechs, or how much funding they're raising, or how much disruption they're going to bring to the table. But it's up to each bank to really understand what their differentiating play is going to be. Unless you have the luxury of unlimited resources and can play in every space, you have to get pragmatic and pick your battles. And I think that's exactly how I recommend that we're taking a look at things, and how other providers that don't have the luxury of unlimited resources really start framing up the problem they're trying to solve. And when you take it one step further, it's also understanding the product and executive leadership at these companies, and is their future roadmap going to align with your strategy as best you know it today. I think that's one of the points people often forget is, where do we think the provider we're getting into an agreement with today is going to be 3 to 5 years from now.
Yeah, I think that's a good point, Hish, and that I absolutely agree with that. I think it's not just about what they're in market with today, because that's a fairly short, roadmap for a lot of these companies, or a fairly short point of view. It's more about where they're going, and does that align with your bank or your institution. So I think that's a great call out.
So, I mean, that's a great point. And, road mapping future, Scott, you brought up how everybody kind of used to just pick a big vendor, buy everything, whatever that may be. And there's just been huge changes in this industry over the past 5 or 10 years in the way that we work with vendors and banks work with vendors. I mean, 10 years ago, fintechs were the enemy and they were going to make banks obsolete. And now they're kind of frenemies and valued partners. And products and services within banks used to have that binary buy versus build, right? So it used to be, do I just sort of go to a big vendor, buy it all? Do I build it all myself? There's pros and cons to each. We've all gone through those. But now, with small modules and little pieces and chunks of the overall value chain, it's moved to a spectrum between buy versus build versus partnerships versus, really integrated partnerships all throughout this industry. So Scott, how do you think about these changes, and how does it impact strategic partnerships and how they look at banking as a service vendors and fintechs?
Yeah, I mean, really, to build off the last point Hish made, I think the roadmap of the vendor is a huge part of that, because that's really what determines, whether they'll be a good long-term partner, or if they just have a shiny object that may sound appealing, but when you dig into it, there are better answers to or solutions to. So I think that's key. I think another piece of this is really looking at what your internal capability is, right? So we see some larger organizations have plenty of internal IT resources, and so they're able to take on more. But on the other hand, if you're not one of those organizations, you don't want to get over your skis, right? And one of the kind of frequent examples we talk about is, we talk to a lot of banks that'll say, I want to be like Chase, or I want to be like Bank of America in terms of the products they put out. And it's a real easy thing to say, well, what's your IT budget? Because unless it's a couple billion, 10 billion, $12 billion, like that's probably not a really great goal to aspire to. So what is it about them that you like or admire? What is it about them that you feel like is making them successful that also relates to what you're trying to achieve? And then you orient around that as the outcome or the target. And that's usually a little bit smaller or more specific scope. And then you find out what vendors or what partners can be enablers to that. So we'll talk about some of the technology pieces here in a little bit, I know, but I do think there's been a huge trend towards some of the technology enablers that have made this possible. But more and more, it's again trying to find out what do you want to be when you grow up, as far as your bank or your institution. How do you roadmap that out into some key milestones along the way? And then who can you work with to help achieve that? And then technology just ends up being an enabler. And again, depending on the organization, what they have internally, what they don't, that drives a lot of what they really need out of a partner, and how sophisticated of an integration that may be.
Yeah, and I would add a few points. I would say, number one, let's not make the mistake and understand how critical partnerships are going forward. The last couple years going on into the foreseeable future. The other point I would just, really, when I look at executive teams, regardless of what vertical you're in, sure, we're talking about financial services, but it's, do you have the right talent to really push the envelope and start making that transition from a, buy versus build, or vice versa? And I think that's one of the common mistakes, Scott. I mean, you use the phrase getting in over your skis. I think we've seen this time and time again in a number of industries where, people are placing bets that just have so many negative outcomes, and that are not achievable, right? And again, of course, hindsight's 2020. But looking back, it really comes down from a leadership standpoint. Did we have the right talent? Number one, do they have the resources they need to make the change, right? And buy versus build's a great area. And then, thirdly, can they deliver on what they're set out to deliver? And I think that's just one of the biggest challenges. But as we, in financial services, I think, from the regional banks down, everyone's looking to control more of the stack, right? That's one of the sort of nirvana moments that everyone's trying to get to is, one, it creates efficiency, it creates more throughput, more velocity. You're able to get more done, but it also helps attract that talent so you can build from, the bottom up.
Great. That's awesome, Hish. I think, Scott, you brought up the customer. Hish, you're talking a lot about sort of talent and mindset. You know, I love this quote. It really, to me, gets to the heart of customer centricity. And, when we think about the customer in the middle, when we think about having the talent and the mindset, Hish, to sort of put that customer in the middle, banks always have historically created strategies and innovations, within the bank, and it's often led to silos and bank vernacular in the way that it comes to life in a digital space. And fintechs obviously have their strategies for growth that they're focused on in this banking as a service area. But Hish, how do you think about putting the customer at the center when you're looking at your strategies and innovation, and how do you refine them? And at what is the customer always there? Do you bring them in the beginning, in the end? Sort of how do you think about that from a product lens?
Yeah. So number one, it's really, you have to understand who the customer is. That's number one. So it's the customer you have today, and there's you can slice and dice the demographics any way you'd like, and then you have to be thinking about the customer you're going after, right? So you can do the blanketed approach of we're just going after everyone, or if you're in a situation with limited resources, or you can't go after that blanket scenario, you have to understand who you're going after and how you're going to attract them to your bank. And I think that's one of the most difficult, alignment pieces that folks in banking have, right? Because we always there's always an opportunity, right, to grow the bank faster, to get deeper with the current customers. But focus to me is truly the key. So it's one of the areas where continually fine tuning is absolutely understanding who the customer are, but then working with our line of business partners and saying who are we going after now, and is the work that we have on our roadmap and teed up, is that the right work to get those customers, to attract them. And so it's absolutely a fine balancing act, but they're fun problems to solve.
Yeah, I think that's a really good point. I think a lot of banks focus on keeping their current customers happy, which is obviously really important. But if you're not also thinking about the customers you want to have, right, whether that's a shifting demographic or that's just you want more, but you want a certain kind, or it's as it relates to your product mix and product strategy, then you might be in a good spot for now, but then 5 years from now you look up and you're like, wait a minute, like how did we end up here? And it's because you weren't looking you weren't looking at the same kind of lens, or you weren't looking through the same lens for customer acquisition. You were only focusing on current customers. And I know we've seen a lot of institutions that see either, again, an aging demographic or other elements. It's a pretty common, I think, refrain for a more traditional bank to say, how do we get more younger customers, right? And it's like, well, what are your products? Well, all of our products are oriented towards, high net worth individuals or CDs or, savings things that are high dollar kind of savings products. It's like, well, that doesn't appeal to, a younger generational person who's just getting engaged with banking in a way to really start to build that relationship. So, again, you could come up with a number of examples, but I think the point of don't just look at what you have, but also look at where you want to go and plan your products, your partners, your vendors along those lines is a really important one as well.
Yeah, and those points right there, Scott, really stress and test an organization, because the model that you're just like describing here requires new investment, right? And so we see the headlines all the time, how quickly fintechs are growing. We don't need to double click on that, but when you look at, well, how are they achieving this? It's through investment, right? It's through venture capital money, through money they're raising. And secondly, they're continuing to invest, A, in the product, A, in, what's differentiating them from a traditional player. And again, the financial services industry needs to do a triple click and say, okay, if this is the model we're playing in, and we have to keep our current customers happy, but yet we want to grow with customers we don't have, here's a model that's working. What's the best way, to get part of that inside our organization?
Yeah, I agree. Although I can't let you invent a term like triple click and just let it go without comment. So
It's okay. That's okay. At least, I was saving the quadruple click for later.
I can't wait. I can't wait.
Thanks. Yeah, I mean, it is a very interesting thing, and I think as we try to, Hishi's talking about all the investment and all that's going on, and then so it actually plays really well into the next piece because Scott, you talked about how much money some of these huge banks have from a technology budget. So the next part we want to talk about is the focus on technology and how to make these strategies successful. Now again, all three of us are more product focused people, but obviously we all work in the technology space, and so I think when we look at cloud, API gateways, microservices, abstraction layers, there's just been so many of these kind of buzzwords and modern tech stack over the past few years. It's becoming clear that the need to critically think through the digital bank building blocks is paramount and takes a lot of time up front. It's not an easy process. It's certainly not a cheap process, but it's critical to actually being able to do it because the decisions that you make on how we build the systems can have a dramatic impact on the future and the opportunities that we've got. The first thing I want to talk about is, legacy systems, right? Because it's tough to talk about financial services institutions and the technology there without talking about them. Almost everyone still has legacy systems. Levvel just did a recent report around modernization financial services, and it shows that financial services firms are more likely to have at least to started modernization than a lot of other industries, but they really only get so far. They don't modernize everything. They don't move all of it to the cloud. Specifically, kind of critical business systems sometimes stay in their legacy state. There's a lot of risk around that. So, legacy technology, especially in financial services, has long been an inhibitor to innovation. So, Scott, how should banks be thinking about the building blocks of digital, and how can partnerships between product and technology drive those changes? What are you seeing in the industry?
Yeah, in my mind, there's two general approaches. One is kind of top down and one is bottom up, right? So a lot of what I feel like we've seen with banks in particular is they've talked about digitizing or modernizing their infrastructure or their technology has been top down. They started experience, right? So they build a slick new mobile app or slick new online banking app or interaction or product, but they don't really change anything on the infrastructure layer, on the underlying layer with the core systems, et cetera. And that's fine. I mean, it's better than nothing, right? It's better than having, crappy experiences, but it's not really going to change the game in terms of adding capabilities and or the ability to move faster. And that's what we believe is fundamentally where things have to go. And what is happening, whether banks want to kind of realize it or kind of be at the front of it or not, is products are getting to market faster. The cycle of new idea to product expectation in the market for your customers is moving really, really fast. And so banks have to be able to move faster, be more nimble. Back when I was at a large bank, product cycles would typically be 12 to 18 months at best to get something big to market. That just doesn't fly anymore, right? The cycle has to be shortened. And to do that, you've got to be using more modern tools and modern infrastructure. And so I think that's where we see the other approach, which is kind of the bottom up, where you say, yeah, you're still going to do some experience modernization, but you also recognize that you've got to change the underlying kind of pieces of the puzzle in order to make all this work faster, better, different. And so when you look at a lot of the new modern tools, whether it's a core like Finxact, and you say, like, what is the benefit of something like that? Fundamentally, a core is a fancy ledger, right? I mean, it's got lots of things that get piled on top of that, but at its heart, it's a ledger of transactions, of records, of puts and takes onto an account. And so that in and of itself doesn't have to be all that different in order to be, like how much can you do with that? But I think what you see is when you look at some of the modern tools, it's not that it's that singular piece that's all that different. It's all the different ways it can be used, accessed, tweaked, customized, adapted, et cetera. And that a lot of the ways the legacy systems from some of the legacy providers operate is they're very rigid, right? They operate a specific way, and a lot of times for a specific product. So here's the configuration for a checking product, and here's exactly how it works. And there is no variance in that. Maybe you can, adjust limits or some other thing, but there's not a lot of configuration adaptability. The heart of a lot of the modern technology is all about configuration. It's all about it's built in such a, using microservices and all these kind of technical things, built in such an adaptable way that you can tweak it to do anything you want. And a lot of that is even things that haven't been thought of or invented yet. Like, and a lot of the thought process from the FinZac team, and I just keep picking on that one or keep mentioning that one, but it's just one of a number of systems, but is that a lot of the ways the system can be used, people haven't even really brought into market yet, because it's meant to serve as kind of a foundation to build off the top of. And that's where I think technology is going, and banks have to think about this. You want to adjust things that touch the customer, absolutely, but those are almost a very narrow window of time that you're going to get the benefit out of that change. What you really need to do to transform the way the bank creates products, is to change the underlying infrastructure that makes it more adaptable, able to move faster, able to integrate better in more complicated or intricate ways with third parties, et cetera.
Yeah, so I think there's a couple interesting points you brought up. I think one is definitely the time to market from a product perspective, and it's way too long, right? Just generally speaking, and I always go back to, how do you differentiate? How do you keep customers happy? How do you attract new customers? And a lot of that comes down to personalization. So when you start driving down on legacy technology, it is very, very, very hard to start personalizing for the customer, right? And when you start looking at more modern technology where it's very, very modular, creating multiple product types that sit within a family becomes very, very easy, right? And so to me, this boils down to who's going to tip the scale from a banking perspective, right? Who's going to make this the norm? Because what's interesting here is, even with all of the light that the fintechs are getting, and again, I don't know if this is 100% accurate, but I don't know how many of them are using very, very, very modern cores, right, that we're talking about today. So to me, the advantage is out there. It's right. Who's going to grab it right now and really start doing something different in financial services? And it's just such a good point that if, we can get by on legacy technology. We've proven that now for 30 years, from a digital perspective, 20 years. But the question is, who's really going to flip the script and change the game? And it's going to be very, very interesting to see. I almost think about back in the MBNA days when they had all of those credit cards, right? So it really just becomes, that affinity program for banking services. It's like, how can we bring this in? How can we, we talked about partnerships before. How do we bring in the right partnerships to attract those new customers? And how do we start creating value of things you're interested in? So it's a really, really, like, to me, this is one of the areas to focus on in the next couple of years.
Yeah, the only other thing I'll add is just, I think it requires some vision, right? Because if you're just looking at the products you have today, or maybe you're looking at what your competitors are offering and you're saying like, oh, I want to offer those too, kind of as is, status quo, it's really hard to make the case for doing a lot of that modernization. Because yeah, you can offer that today using the products you probably have today. But the point is, if you've got the vision for a different way of interacting with your customer, of more flexibility in account structure, right? Like, just to pick it a really simple one, what is the point of a different savings versus checking account, right? There's some regulatory differences, but that's about how the account gets reported and structured and funded, not about like what the customer actually interacts with, right? That's the construct of legacy systems. The fact that those are distinct things and have to stay distinct things. There are ways to both meet the regulatory requirements around the differences in those accounts and provide a more interesting customer experience or product that has more flexibility from the customer standpoint. So, I mean, there's just all kinds of things where you can really look at what does the customer need? What is the pain point? And instead of relying on, okay, well, we have these products, we have checkings, we have savings, we have mortgage, we have loan, like really thinking about when do they need money and how do they get that money, right? The whole emergence in the retail space of the buy now, pay later stuff is an exact kind of example of that, where it's not like this a fundamentally new product, right? I mean, it's a credit card, it's a loan, it's all these things that already existed. It's fronting the customer money and having them pay you back,
Yeah.
but it's repackaged as buy now, pay later, right? And it's blowing up, but it's not really all that different. It's just kind of a reconstruction of the same things that already existed.
Totally. And it's we could go almost play ping pong on this. It's no different than some of the fintechs out there offering getting your paycheck 2 days early, right? It's not like one fintech has a competitive advantage against another fintech or a traditional bank. We can all replicate those services, right? And so I could not agree more that understanding the true nuts and bolts of the machinery we're operating of, like that to me, that's when you start squeaking out these marginal differences in the products and services you can offer. And again, you ended your last point on this topic, or sorry, last topic on this point is technology is going to enable all this.
That's great. You guys both touched on the next topic, right, which is really speed to market. I mean, people have talked about legacy technology from an innovation and speed to market for a while. Scott, you mentioned the product life cycle and getting things to market, and it used to be, it used to be much longer than it needs to be now. And I think customers are no longer just looking at financial services companies, but they're looking at across industries for their comparison points. And honestly, they just kind of want things when they want them quicker, faster, better, cleaner, and all of that. So, in this space, though, it's both obviously the legacy technology, it's also the legacy processes within a bank. How can how can we look at banking as a service vendors and then our own internal tech stack and processes to really be able to meet the customer demand when they need it, in short order when they pop right up, right? Because you're right. I mean, you only have so much time to do this, and if you're 12 months out, ultimately, by the time you get to market with something, it's going to be sort of, past the time when you needed to get there. So, Scott, how do you think about really how you would look at speeding it up?
Yeah, I mean, I think this is a fairly simple answer, but obviously much more complicated to put into place. But it's flexibility, it's modularity, and it's scalability, right? It needs to be flexible, it needs to be modular, it needs to be scalable. And there are technology things behind all those comments, right? Whether it's being cloud based so that it's truly scalable, whether it's using microservices so that you can truly be more flexible and modular, whether it's looking at APIs and how you leverage APIs between partners so that you can actually hook things together as opposed to having to overcomplicate file handoffs and all those sorts of things. But I think those three things are the key for me. And again, they play out differently in different organizations. But if you look at how, not just in financial services, but in generally, as Hish said before, like tech companies and how they are able to move faster, however they are able to do things. You look at an Apple or a Spotify or a Shopify, like they're deploying code multiple times, and in some cases hundreds of times a day. Right. And you think of the traditional bank life cycle of deploying code. It used to be once a quarter. We got into once a month, and now in some banks are doing every other week. And some are doing it much more regular, to be fair. But the vast majority are still on a 2 week or a monthly cycle. Again, it has to do with all these things, and that plays into like DevOps tools and just infrastructure, plays into business process, it plays into the actual talent that you have and then their ability to use these tools. But I think those have to be the goals in my mind of ultimately what you're striving for from a technical perspective.
Yeah, and I think all of everything you're describing starts with alignment. So I'm just gonna give you my personal perspective. It's alignment with the CIO and the entire technical organization. It's alignment with your third parties and really understanding where you want to be, right? Whether it's from a release time, how you're working together. Um, and those are the things we've been focused on at Bank of the West. Clearly, it's changing the way we work, getting the first order of business I had when I joined the firm was just getting alignment with our CIO. hey, what journey are you guys on? Here's where we'd like to be, and just understanding the necessity of both of those teams working together side by side and never being off base with each other. And then bringing our third parties in, and sharing with them, here's our vision, here's where we'd like to be, and pushing those teams in the right direction of where we want to be. And to me, that it's just the perfect tee up that when things, in our industry and our vertical come up, you're prepared there, right? And so, we look at, the most recent example of PPP, right? No one predicted a pandemic. Number one, no one predicted PPP, or more importantly, how PPP was going to be rolled out and managed from the SBA perspective, right? And that there, some banks, who did it very well. There's some banks who went out to a third party, but in either case, the question, can be asked: were you as prepared for this event as you could have been? And so, it really, again, I think it begins and ends with that alignment and just having those real down to earth conversations with the right leaders in your shop.
So that's a perfect segue, Hish, because we talked about the fact that honestly, 12 months of a product cycle is way too long, right? But we also know, I think more than anything, that 18 months down the line, the world's going to look a whole lot different than we think it is today. We have no idea how, unfortunately, right? And so the product and technology teams need to be in sync all the time, be able to adjust those needs. So, at Bank of the West, how do you guys think about ensuring that nimbleness, that flexibility, preparing for the unknown and all of that, because we know it's going to happen. We don't know when. We know we need to be able to react accordingly and quickly. So how do you all think about that?
Yeah, I think it boils down to one again. I just hit on this point of alignment. So once we have alignment between technology, our third parties, the digital team, it then boils down to just asking yourself, how do you continue to get better? What more can we be doing? What best practices can we look at? Who are we striving to be an industry? And I'm not talking from a product perspective. That's not where I'm coming from. I'm really talking about the foundation of how we're working and what tools we're working with becomes so critical, because when we understand how the best of the best are doing things, that really gets our wheels turning to say, hey, could we replicate this? Yes or no? And there's some things we'll never be able to replicate from companies we truly admire. And that's okay. That's just accepting it and saying, okay, well, we can't be great in this area, so we're going to be great here. And having those conversations will really get you to the point of when something, like PPP comes up, or you have some major event that the business, right? They've come to me several times in the last couple of years where we have to do something, and not from a regulatory standpoint, really from a product standpoint. We really need to get something out there, and we can absolutely show the difference in speed to market from 3+ years ago to the last 24 months. And so it's just pretty remarkable to see how quick we're able to move now, and then just being able to go back to leadership and saying, hey, technology is really the enabler here, but we're also just in a much different mindset than we also were 3 years ago. So it's interesting to see.
So in the next section, we want to talk about putting your product hats back on. So strategies, large scale projects like this have to be sold internally. It involves a roadmap, a business case, ROI, a lot of risk avoidance, all the fun stuff that goes on in banks. So I want to just talk through these pretty quickly and just hit a couple of high points. So a big part of the prep work's the business case, right? And so one of the more interesting things that we've seen recently is bank metrics in the past have always been pretty easy to measure and pretty hard metrics, right? I can sell this many mortgages if we make this change. I'll add this many checking accounts, right? So core product sales, cost reduction, getting calls out of the call center, improving efficiencies. But fintechs really have looked at it in a slightly different way, and there's been a huge push for around customer satisfaction and experience, and how the brand comes to life, right? And that also is not just in fintechs, but it's also in technology companies in general. And so, Hish, when you're thinking about business cases, large projects like this, especially in this space, how do you marry these two types of KPIs, right? How do you think about these softer metrics aligning with the more hard metrics when you build these out?
Yeah, so it really starts with what the strategy of the bank is, right, or of your company is. I mean, we can be generic here and just say company, and then it boils down to, what are the OKRs? So what are your objectives? What are your key results? And then we get to KPIs, right? So, understanding those, having the in-depth conversations with the business leaders, with the CEO, saying, okay, here's our objective right now, and then working side by side with technology, the line of business, our second line partners, and saying, here's how we're going to achieve it, and creating that strategy, knowing that we're most likely not going to get it right. And those are the very, very transparent conversations we have internally, right? Like, I could tell you my OKRs now. I could rattle off the 52 KPIs that we're tracking to that map back to the two major OKRs. And my guidance to the team right now is, yeah, we may not have this right now, and that's okay, because we can adjust, right? And I think that's part of, the trust you have to build within the organization. But more importantly, those are the transparent conversations you should be having, because you have to step away with how traditionally things have been measured with, how many customers do you have active in digital? How many accounts did you open online, right? It starts getting 3, 4, 5 levels deeper, and you've got to have, good data to support, right? And you have to have product owners who understand that, hey, our hypothesis could be wrong here, but that's okay, right? We're still driving towards the same goal, and we're aware enough to know that if we need to pivot, we'll pivot.
Scott, what are you seeing in the industry and other firms? How are they marrying these experience and hard metrics together?
Yeah, I think Kish hit on it pretty well. I think you have to have metrics to run a business, right? Otherwise, you don't know what you're trying to achieve, and you can't hold yourself accountable to that. So I think there's always some element of having, whether it's the OKR framework or some other framework, but having KPIs and tracking to those things. I also agree that at least in more forward-looking organizations, there's got to be an openness or willingness to try things that maybe aren't the thing that really is quote unquote successful, but success is seen as moving the organization forward. So I think Hish articulated it pretty well, but I think that's a pretty common perspective in organizations that are trying to grow and transform themselves, and that not everything you do is going to be it, right? Not everyone's going to be a winner. Not every product or partnership is going to turn out to really be the one that completely transforms everything. And I think if you try to look at them that way, you're probably going to end up disappointed. I think you have to look at it as a roadmap. You have to look at it as moving the organization forward. Every project you take on where you're working with a more modern tech stack or a vendor or some new integration, you have people internally that are learning from that, right? Whether it's the technology side of learning new skill sets, or it's just new patterns of doing things that you didn't do before. Again, it could be technical or business or operational, or it's just in pushing people's minds of there's different ways of doing things than how we thought about in the past. All of those are super, super important to moving an organization forward. And so I think as long as you've got the right mindset, where again, you've got to run a business, so there are financial metrics you have to track to ensure you're in a good spot, but it not being just about that, and then not being the only lens for success, I think is really important.
Yeah, and it's so spot on, right? Because the entire concept of an MVP is never going to hit your financial metrics. It's never going to hit your desired experience metrics or cost reduction or whatever you're driving towards, right? And it's one of the hardest things, even myself as a leader, when the team will be working on something that clearly maps to what we're driving towards, but then the MVP is scaled down from where we're going, but it's the right thing to do, right? It's the right thing to do, to gather the learnings, to make sure you're headed in the right direction, to make sure that compass is truly pointed with where you set off. And, again, I have to remind myself, the team reminds me too, hey, this is just MVP. This is, part of what we're doing. But as leaders, we want everything now. which is, it takes time to truly get that in, woven into the fabric. But, the entire concept of an MVP is just something that, we live and breathe by.
So Hish, you just brought it up, and this is kind of where I want to, end the conversation today, which is, road mapping, right? And so, this takes into account everything we've talked about: strategy, innovation, customer centricity, technology, business cases, and all of that sort of stuff. And ultimately, you need to listen to your customers, but the product people have to be the one to create that roadmap. And so, when you think about what's an MVP, what's a fast follower, those sorts of things. And obviously, as the leader, you want everything right away. You can't always have it, but how do you work with your team to create that V1 roadmap that meets the most needs in that Venn diagram that product always has to sort of deal with? So, how do you lead your team in thinking through that first roadmap and what's going to be the most impactful for the company?
Yeah, it starts with alignment, transparency, and conversation. Everyone is going to have a different perspective. The way I view digital is it's not my way or the highway by any stretch. We have a lot of input from technology, a lot of input from the product partners, obviously a lot of input from what we call the digital neighborhood, right? Where a number of senior executives sit around the table, and it's our monthly MBR, so to speak. But we have to find balance, right? We've got to find balance in the BAU. We have to find balance in the change the bank, and we have to find balance in the differentiators. But you end up landing at the right spot when the entire leadership team is aligned towards what the objectives of the company are. And they're absolutely difficult conversations at some points where there are just some things that in some cases we've been trying to do as an organization for years, and they keep getting placed back on the table for initiatives that more align to where we're headed. And those are the tough conversations to have, right? Because resources always play a major factor, but the strategy and the customer are always going to win out.
Thanks. That's great insight and a great thought. And well, we'll wrap it up here. And so just to recap, we talk about navigating the next banking revolution. We've talked about the fintechs and the banking as a service providers and how abundant those options are, and really thinking through sort of where you can play and what your strategy is. We've talked about all the modern tech and whether you buy, you build, but how do you be nimble and flexible? And then lastly, I think we just had really enjoyed this discussion around OKRs and KPIs, but really making sure that everything is pointed towards, kind of what I heard was that North Star of what you're trying to accomplish in the digital space. So for either of you, is there anything that you feel like any points we missed, anything you want to add before we wrap up today and get to the questions from the audience?
I'll add one thing, Toby. I think it's easy to get wrapped up in this topic and kind of take one or two approaches. One, just completely dismiss it altogether as like, okay, yeah, it's just a bunch of people talking about a trend, or it's the hottest thing, or the cool thing to talk about now, so everyone wants to talk about it. And then the other is to believe it is important, but be overwhelmed by with what to do, right? And so I think to the first, I would say that I do think there is a fundamental shift, and it's not just in financial services; it's across all industries, but in how organizations are bringing product to market, and that a lot of that is rooted in technology. Things like the availability of APIs has really changed the way organizations can interact, not only with themselves and the kind of between systems within the bank and et cetera, but with partners. And that is a huge driver of why we see so much of this activity kind of spinning up. Is 10 years ago, it wasn't the way to integrate with partners the way that you can now. And I think APIs have completely changed that to where it's almost an expectation. There's no way a bank, even Chase, we mentioned before, their $12 billion IT budget, they're one of the most partner-centric organizations or banks that exist, right? So even when you have all that money, you still don't try to do it all yourself. You still find partners to work with that are best of breed in certain things. And I think that should say a lot about the expectation of financial services organizations and kind of the modern era and what they're going to need to be able to do. And this topic of banking as a service, and again, it gets described in a lot of different ways, but its fundamental core, if you think of it as how can the bank interact better with kind of its customers and its partners, For some banks, that'll mean a full blown, they've got an API portal and all this craziness stuff where they're fully exposing services out there for others to consume. And that's great for them if that works, but that's very, very few banks, right? I think for most banks, it's about how do you modernize your internal infrastructure to both be able to bring products to market faster yourself, one, and then two, actually integrate with modern partners in a way to bring more product to market and scale product that you already have, right? That's a part that doesn't get talked about a lot, but a lot of these partners can end up being distribution channels, for lack of a better word, right? You have a loan product, that's great, but if you can suddenly create more of a pipeline for that product by being partnered with 4 or 5 fintechs that are out there doing PPP loans, well, then not only are you capturing the people that come directly to the bank for those loans, but you get another 500% volume from your partners that are funneling it in. So, I think that's what's important to think about in my mind, is that this is a trend that impacts every organization, whether you want it to or not. It doesn't have to be a big, scary, like turn the whole world upside down thing. It can be incremental, but that you do have to pay attention to it, and you do have to think about at least what is your strategy or your approach, and where do you want to fit into the ecosystem as it develops going forward.
Yeah, and the point I would make or the comment rather that I'd make with everything we've talked about is just changing the mindset within your organization, right? And starting to believe that things can be done differently. There are better, smarter, more efficient ways to do things. And again, it's a challenge, right? We work in one of the most longstanding industries, and change is hard for everybody, right? It's not an easy topic. It's not easy suggesting that someone has been doing something wrong or could be doing something differently. But to me, that's the biggest opportunity that we have as an industry, is just saying, hey, things can be done differently, number one, and then starting to do them differently. But that's the point I'd make here, and I think it truly all maps back to every single point that we've discussed today.
No, I appreciate it. That's fantastic. So we're going to get to the questions in a couple of minutes, in a couple of seconds. I just want to mention the legacy modernization report that was referenced a couple of times in these slides. It's available on Levvel's website. You can see the link right there. So we've got 3 questions from the audience that we're going to take. The first one, Scott, we'll start with you. What do you think about big tech getting into so many parts of financial services, and what does it mean for the future of banks?
Yeah, Toby, that's a really timely question, especially given the moves that Google in particular has made in the last 6 months or so with some of the new services that they've been announcing. I think you can look at it on a couple of levels. On one, I think big tech is can be just another partner / provider. Right. Certainly, there are products, services, functionality that these companies can bring to the table. I mean, Fiserv is big tech, just like Google is big tech, right? They may have different heritage and different kind of views of product, but they're both really large organizations. And so I think to some degree you have to look at it from what are they making available from a product standpoint, and does it align with my strategy and what I want to do? So for some banks, that'll be a yes, and for some banks that'll be a no. And I think that's really no different than, like I said, any legacy, a Fiserv or an FIS or et cetera that you may have looked at before. So I think they will continue to act in one of 2 ways, and it seems that I like to say one of 2, so I'll just keep with the theme. One is in more of a supporting existing organizations and kind of models, if you will. And I very much put Google into that bucket of, I think they, one, aren't going to become a bank. I think they will offer lots of banking services and products. And I think they will continue to do it in an ecosystem way, as they always have with Android and everything else, where they look to partner with as many banks as they can to get spread all over the world, right? I think that's the model we've seen them do in pretty much everything they've done. I think they'll continue to do that, and that's what we can see from them. And again, if that works for your organization in terms of what they're offering, then great. I think it's a good idea. If it doesn't, because of your own kind of agenda or your own product roadmap or your own initiatives, then that's okay too. I think that's fine. I think the other bucket is how you look at the Apple approach. Again, I don't think Apple is going to become a bank either. But I think in traditional Apple fashion, they will continue to offer more products and services in the financial services space, but they will own the experience of those products and they will lock it down. So they will work with one partner. Maybe they want to work with as few partners as they have to, is the way I look at it, right? So if they can get to market and scale with one partner like a Goldman, then great. That's how they bring it to market. If the product experience requires multiple, like it did with Apple Pay, then they'll work with multiple if they have to. But I think they're much more oriented towards, building products they can control in their ecosystem. And so I think you'll see in general, the tech players line up to one of those two strategies. And so as an organization, you just have to be mindful about what works for you.
Yeah, and I'll just add that one, we've been hearing the same headline now, I think, for 20 years that, fintechs, tech providers, they're going to come in and, completely disrupt banking. And, to some degree, maybe, but it hasn't happened as the headlines would portray. And so what I'd say, I welcome the challenge. I think it's going to push the entire industry to start doing what's right for the customer. And there are a lot of good ideas coming out of fintech and tech companies. That's one. The only thing that I think needs to be mandatory is that, if people are walking into financial services, we have to be regulated and governed in the same light. And that's a topic, I know it's extremely sensitive but I think that's how we truly get to a level playing field where, things are, entirely equal at that point.
Great. Hish, the next question is specifically for you, Scott. They were not interested in your opinion on this. My bank is just starting through our plans for this. Tactically, Hish, for a bank just starting out the plans, what's the first thing you would do?
I would say one, understanding why are you doing this, right? And it really boils down to who the customer is and what outcome you're trying to drive. And again, time and time again, we hear buzzwords like open banking and people stop working on things that truly matter for the customer and they start focusing on things that don't matter for their customer, right? It could be their future customer, and we've talked about that, but people should look at the data that's readily available to them in Europe with legislation that went out regarding, PSD2 and other forms of open banking that have taken significant light over there. They should take a look at what Scott was referencing in the last question, which is some banks have, opted into this space as well. But again, let it be, very, very organization centric that is tied back to your customer and tied back to the values and your goals.
All right, last question. Scott, we'll start with you on this one. I know that big banks are moving on these strategies, but what is slowing down adoption in smaller banks and credit unions?
Yeah, I think it's a combination of dollars to spend. I mean, candidly, right? The smaller the organization, the less IT budget they have. So there's some element of this that is just pure budget, and that while we talked about, the extremeness of the large bank budgets, there's also kind of the opposite end of that of really small institutions, $400, $500 million asset size institutions just don't have as much money to spend. And so a lot of what they do spend, they need kind of locked into a single provider to do that, because that's the only way they get the cost efficiencies to be able to pay for those pieces. I think we're seeing that increasingly change in the sense of it almost doesn't matter the size you are. If you're not offering some of the modern capabilities, then you're going to see customer attrition in a way that is going to be impactful in a negative way. So we see a lot of smaller organizations starting to broach into this a little bit. But I think the other dimension, which is also an element of budget or of size, but it's just internal IT competency, right? I mean, this is not stuff that's necessarily easy to think about or sort through if you don't come from a background where you've had some exposure to some of these things, whether that's in another organization or that's, by having some interaction with some of the providers or some of the technology. So if you think about the normal IT staff of even a mid-tier bank, there's hundreds or even thousands of people. The IT staff at a really small bank or credit union could literally be like 2 or 3 people, right? And that's a lot to put on those people who are also trying to keep the bank up and running. So I think that's really the challenge for small institutions. It's a combination of budget in terms of hard dollars to spend, but also just in terms of internal capacity and capability on the IT side.
Great. So for everyone out there, if we did not get to your questions, you will get an email from us with a response. But I want to thank everybody for joining, and Scott and Hish, I want to thank you both for your insight and thoughts, and hope we can do this again soon.
Yeah, always a pleasure. Thank you, Toby. Thank you, Scott.
Yeah, thanks, Hish, for joining us. Thank you, Toby, for hosting. It's been a great conversation.
Thanks, guys. Bye.